From the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today, I'm very pleased. Joining me from Jordan, Moataz Mukhaimer. Moataz, thank you very much for being here with me today. Moataz, I was, explaining to you in previous discussions, the way I love to do it is I keep it to my guests to introduce themselves. I have a theory. No one can tell someone else about someone else other than the original person. So
It makes sense.
but like kind of hints for the audience, what we're gonna talk about today. So today, I think it's an important topic, and I'm very glad Moataz is here with me today. We're gonna talk about, all things which founders, we think they struggle from financial perspective, like modeling, strategies, and, funding readiness. So we're gonna discuss these topics with Moataz today, and as usual, the floor is yours, Moataz.
Thank you so much, Mehmet. It's an absolute pleasure to be here. Thank you for the invite. I'm a fan of your show. I listen to a lot of episodes, and it's always interesting when you talk to different people how much perspective you can learn from them. So let me start by talking about introducing myself. I'm Moataz Mukhaimer, like you said. How I describe myself, I'm the person who leaders come to me when they have either a challenge to overcome or an opportunity that they're thinking of pursuing. I'm a strategy and finance advisor. I work with SMEs and startups in the Middle East, but I've worked in Boston, Montreal, Toronto, Kuwait, Bahrain, and then I moved 10 years ago to Jordan to work as an independent consultant.
Great. And thank you again, Moataz, for giving me the time today for this, episode. Now,
Absolutely.
you mentioned something which is close to my heart, startups and small, medium businesses, right?
Yes.
So, like, especially for people who might be doing business the first time, right? What kind of, I like to call them blind spots, right? That usually they have, both from, strategy perspective, because I think strategy is core, right? So we need, the strategy is like the roadmap. Of course, I would leave that to you. But, what are like the main things you see them missing? What are like the challenges they face where they come to you and say, hey, Moataz, like, you know what, like, we feel like we are hitting a wall or reaching a dead end. So tell us a little bit more about these challenges that you see commonly.
That's a fantastic question. I think if I want to think about top three things that are in blind spots for startups, and surprisingly for some companies that have been doing this for a while, the first one and sort of the very critical one for me is research. I find it surprising every time I work with startups, especially in founders, the lack of understanding of the importance of research. And research includes everything. For some bizarre reason, a lot of business education and a lot of maybe programs that founders go through concentrate on the inner issues of the company, product, team, and all of these things, which is very important, and you need to research this. But I don't think they pay enough attention to the external factors. So not enough attention is paid to the industry you're going into and understanding its nature, competition. They do very superficial competitive analysis. Founders usually don't do enough research even about the client. So they make a lot of assumptions, and these assumptions end up costing them a lot of money. So research is the one blind spot where people, founders, don't pay enough attention to, and they should. I always tell them, research, research, research. You know how they say in real estate, location, location, location? For me, it's research, research, research. The second one, I think, if I want to talk about blind spots, this is critical for founders and leaders and business owners. They do not understand their influence on the team. I find this a lot, even with medium to large size companies. Leaders do not understand the impact they have, whether positive or negative, on their team. You, as a leader, it's not only a privilege, it's a responsibility. So you need to understand, as a leader, every word you say, the impact of that word, the energy that you give, the responsibility that you have to lead the team is a lot more. So the same word that comes out of me has no effect as much as the one that you would if you were our leader. And I think I spend a lot of time with leaders trying to get them to understand that you unfortunately don't have the privilege of being super frustrated. You actually need to pick up the pieces when things are bad and bring the team together and actually try to find the positive way to solve the solution, the problem. And the third one is my favorite, the blind spot, which I find is financials. There's a lot of the startups that we work with these days are tech companies and startups. And usually these people are programmers or engineers and very inventive and very smart. And they know a little bit about numbers. And for them, the priority is to have your MVP, launch, sell, scale, scale, scale. Fantastic. Yet there is an issue with you and a very big problem that will appear if you don't pay attention to your numbers. These are the
Right.
three. Yeah.
The first one, you know, you're so right on it, and me included. Like at some stages in my life and in my career. And by the way, I think we do it not only when we launch businesses, even in our normal careers,
Absolutely.
where we don't do enough researches, and then we go out and say, hey, like it's gonna work, like. Uh, and this is, I think, little bit. Of course, it's nice to be optimistic, right? And say, yeah, let's do it. But I think this is the way and again, I related to the last point, which we're gonna jump to it next, which related to the financials, right? So we assume always the best case scenario, and we forget to talk about the worst case scenario. So the three blind spots indeed, but I think the first and the last one you mentioned, I think this is what we see more common, of course, and of course the second one also. Now, talking about financials, Moataz, I come also from engineering background, right? And I had this assumption always, oh no, man, like the last thing I want to deal with is just, Excel sheets and working
Absolutely.
with numbers, like let someone who understand accounting and so on. But why it's important to have this, let's call it financial literacy for running a business. And again, of course, we focus more in tech companies. And to your point, the founders will be coming from technical backgrounds. Do they find it complex? Do you feel that they are getting scared of just approaching this financial modeling?
Mhm.
Like it's like that word, mysterious word. Is it like kind of like illiteracy? Is it kind of fear of discovering something else? So it's something to me also, by the way, it looked back in the day something big. But of course, when I started to understand, oh, like this is totally makes sense. So how we can simplify and how you help actually, people who approach you and the people who you work with to simplify financial modeling and why it's important.
Sure. It's a very good question. Founders usually fall into maybe a couple of categories. The first one is they are so occupied with proving their concept, understandably so, and they don't have time to think about these things. I just want to sell, 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 and if I'm selling enough and my sales are growing, then I'm fine. The second category is always thinking, it's too complicated. I don't want to think about it. At some point, I will, but it's one of those things where it's on your to-do list, but it keeps going down and down and down because you don't like it. And I think the third part is people usually, some founders think, oh, at the beginning, I don't really need it. It's just, we'll get through it. we got our first round of funding, and then once we're at a certain stage, I'll just hire accountants or finance people, and then they will take care of it. The problem is, um, what I tell founders is, I'm not expecting you to be a financial expert or an accountant or a finance person. This is not your job. But it is critical for you to be able to ask the correct questions, look at the correct KPIs and numbers and ratios even when you have a finance person, and be able to think about it and base your decisions on it. The reality is, especially startups, you need to, even if you get funding, you need to be bootstrapping. You cannot just spend money and burn. So you actually need to know, where is this money going for? How much are you spending on what? And what is the return on all of these things? Because you have so many things to think about. And each founder has to think about their industry. Again, that's why external factors matter, because certain industries, certain sectors, there are certain numbers that matter in addition to sales, more than other sectors. So you need to pay attention to these sectors.
So just I want to add one thing, Moataz, which is you said like sell, scale. I think one of the things that I see usually also is build. So in a sense, yeah, let's keep, shipping features. Let's keep shipping, extra things that we think the customer might like, right?
Sure.
But the only thing, and correct me if I'm wrong, but and there's something I don't know how you factor it in the model itself, which is time, right? So time. I was just reading something today in a book where they say time is scarce for founders, but usually investors, they have the plenty of time, because this is actually their game. It's a time game. So how much is this related also to have, this mentality of balancing between, what the customers want, what the market is telling us from research perspective, back to your point, research, and factoring that into the financial modeling itself. So for example, if you can, tell us, or like shed some light, for example, on like the burn rate, and like the runway, and these things that I believe, yeah, of course, we see them in the literature nowadays, and people share about startups. But I think if you can, shed some light on this, it will be very beneficial for the community.
Sure. Again, each sector has its specifications, but let's talk about things that are applicable across the board. You need to understand that it's not your business model. When we talk about business model and talk about the solution and the problem that you're trying to solve and who is the customer, part of that business model, it needs to translate into a revenue model, a financial model that makes sense. Unless you're opening a not-for-profit organization, the point of you doing all of this is to make money so that you can self-sustain and that you can grow. So you need to make sure from the beginning you totally understand, very fully understand, how is it that you're going to make money. The problem is, or the challenge is, a lot of and I see this with tech startups, they have fantastic solutions. There's multi-layers of users and end users versus customers versus suppliers, and or maybe two-sided partners in marketplaces, and they present these solutions, and I'm like, okay, so how are you going to make money? So that's the basic thing. You need to understand how is it that you're going to make money, and then we move on to a couple of things that need to be always on your radar as a founder. I need to understand, how am I making revenue? So how much am I going to sell, and what's the price? I need to think about the other side, the cost. It doesn't matter how much I sell. That's a great thing. And startups usually concentrate on the top line, which is revenue. But on the long run, I believe if you're not looking at your cost, how much it costs you to produce, to build, you're going to eventually either waste a lot of revenue, profit that you could have actually gained, or you're actually going to go into loss. So you need to understand, how much does it cost to produce something, to make it, And the burn rate, when we talk about burn rate, we need to understand, especially as a startup, how much are you spending on a monthly basis? Like, you need to understand how much are you burning? How much money are you putting in? Do you have developers? How much are you spending on marketing? Marketing is a big one where founders usually underestimate how much marketing they need to put in. And all of this relates to how much money you need. It's all connected. You're selling, how much it's going to cost you, how much funding do you need, and then include that the challenge of actually growth. I need to grow, I need to grow. So all of these things are all connected. Remember, for any founder, if there's something that you need to really, really pay attention to, is your cash flow. At the end of the day, forget everything else you think about. When you're creating a company, you're creating value. Value means that you actually need to make cash. You need to have free cash. And this is based on, even when we talk about valuation of companies and all of these things, it's free cash. You need to make cash. So you need to pay attention. It doesn't need to be fancy. You just need to know how much cash is coming in and how much cash are you paying, so that you know when is it that you're going to need extra funding, what months are you going to be in stress, what months you're okay. All of these things connect to cash flow. This is the most important thing to pay attention to.
That's great, Moataz. Now, some of the questions that usually I hear it from people from time to time, and again, you kept mentioning depends on the sector you are in, right? It depends. So, where to start? Like, and everything starts because you mentioned something very crucial: understanding our costs first, and then we need to put a price tag on the service or the product that we are trying to sell. And here where, I think a lot of people probably they skip this important part of putting the right pricing methodology. And I've heard a lot of people, and when I was much, much younger, I was having the same thought, which is wrong, of course, but you learn with time. Oh, how much is the best competitor selling this? Okay, I'm gonna break it half of what he's selling. And then you know what? After a couple of months, oops, we're losing money. So like, what are like some of the best practice? I mean, like you kept mentioning research. I want to come back to the research. Where to start the research? Like, what are like some of the available resources, available, I don't know, tools? Maybe they come to someone like you, Moataz, who you saw a lot of different, businesses also as well. So founders, if they really want to put the right pricing strategy so they can consider this into their financial model, where to start?
Where to start is, and I always tell this to founders, these days, there is an abundance of information. So there's a lot of great podcasts, just as yours, where you learn. And I think in general, founders need to find the time to read, to listen to podcasts, and to speak to their industry. Mentors in their industry, try to learn from other people from other different sectors. That's why community is extremely critical. These are the resources that you can think of, and you can research business pricing strategy and all of these things. But I like the fact that you went to pricing, because to me, this is one of the most critical points financially for startups, how to price. And I cannot tell you, I think 9 out of 10 companies that come and talk to me about pricing, usually they're talking what you said. We're not selling enough, so we want to decrease the price. And usually the solution, if it's related to pricing, most scenarios than none, the solution is not to decrease the price, it's actually to increase the price. Because when you're a founder, sometimes when you're a company going through stress, you get insecure about the value of what you're providing, or the economy is going through stress, like now we're predicting recessions and all of these things. So you start panicking, you think, let's decrease prices. Every research has shown that pricing is the most critical point, where the 5% increase, I think this was research done by KPMG, where they looked at all of the factors, price, cost, and all of these things. And they saw that price, the same difference, if you increase price by the same percentage versus decrease cost by the same percentage, or play with other factors, price has the most direct effect on your net profits. So actually, you need to concentrate a lot on your pricing. What you were talking about in terms of slashing prices and all of this, it doesn't work this way. You need to think about where your positioning is in the market. What kind of position do you want to be? Where do you want to play in this market that you're playing? You need to think about that strategy versus model. Sometimes the solution is, or how to be competitive is by offering a subscription versus a one-time payment. All of these things can be actually strategic tools. What I advise your listeners to research when we talk about pricing is value-based pricing. That's the strategy that eventually you want to get to. Except certain very few industries where economy pricing, meaning the lowest price at the lowest cost, most companies need to move towards value-based pricing.
That's very important, Moataz. And if you allow me to add my 2 cents, as they say. So based on what you said, now I tell people when you go to a business, right? So you choose between two paths. So you choose between going with what is called the red ocean.
Yeah.
So you have a lot of competition, and you usually, you're what kind of differentiation you can offer there, right? Okay, you can do things maybe a little bit better, but little bit faster, but the price will be actually your, yeah, it will make it
Yeah.
or break it. And then you need to play the volume, and then you need to play on the marketing, and then you have the blue ocean kind, or what some people in the tech startup world they call it the 0 to 1 company, right? As Peter Thiel.
Sure.
And now there, and I'm trying to demystify some more things. And again, feel free, Moataz, to stop me or add of what I'm saying. Um, Regarding the pricing strategy and all this, I think it comes back to understanding your ideal customer profile. I struggled myself. I used to yell sometimes at some companies why they are so expensive, why they don't understand. And then I figure out later, hey, listen, like these guys, they sell to enterprise companies and they are not
Exactly.
interested.
You're not their client.
Exactly. So, and always the good example is like, yeah, Ferrari, they don't sell to everyone, right? So they sell to like part of the market.
A slice of the market, and they honestly don't care about what the other what other consumers think about them, because they're not their target market. And you also need to do the same thing. Don't pay attention to other people who are now your target market. You're too expensive for me. Okay, you're not my target market anyhow, so I don't care.
Yeah. So I want to relate to something. I like it. When you said research, research, research. I want to back this. This is what you do in the research. And
Exactly.
yeah, my dream is one day I would be able to bring him on the podcast. Let's see. So Steve Blank is a very well known figure,
Of course.
professor at Stanford University, and he keeps talking about going out of the building. So actually, when I was dragged to this entrepreneurship startup thing, I kept watching his videos, and he kept repeating this word. At the beginning, I didn't get it. Go out of the building. Actually, he was saying about doing research. So go and go find out. Like you can just me and Moataz now. Let's say maybe I'm coming from technical background and Moataz, he has the strategy, financial, so he will be the CEO, I'm the CTO, we'll go now and write down many theories. And these are like hypotheses. We don't know. Like if we believe that this is the only truth in the universe,
Absolutely.
a chance 1 in 1,000,000 maybe we'll succeed, but the big chance that both of us we are wrong. So what Moataz is telling you guys, go out of the building, go do your research, understand your market. And now I want to understand more because Moataz, this is something people they think strategy is only for the big guys, right? But let's open this a little bit more. So because you work with a lot of clients and your work is like talks about itself also as well. But when we say strategy, so let's explore this more. What is a strategy for business owners, for startup founders? What does it mean? Like what areas it covers, if I
Sure.
might ask?
Strategy is one of those words that's I think very overused, and one of the most misunderstood concepts on business. I sit down in many meetings and I find that people are, it's just, I don't know why they think it's fancier if I put the word strategy behind or before any other word I put, So it is a very strategic goal. It's a very strategic decision. It's so everything when you put strategy in front or after, I don't know, does it
Fancy.
give you any fancy? Exactly. And there is good reason why this is. There's plenty of schools that talk about strategy. There isn't one unified answer for strategy, but this is why I like strategy. I work with finance and strategy. So finance is numbers and ratios, and it's much more precise in my brain. Strategy is the area where it allows me to be creative and allows you as a founder to think outside the box, inside the box, destroy the box, rebuild the box. For me, strategy simply answers the question, how are you going to win? You need to understand how is it that you're going to win. You need to identify, diagnose what is the challenge or what is the opportunity that's in front of us that we need to take advantage of. Or most companies, it's usually what is the challenge that's standing between us and achieving our vision. You need to answer that question. The problem with strategy or the challenge with strategy is people usually confuse it with, sure, we're going to have monthly meetings, or we're going to do operational stuff. Strategy is a big picture. It's not the little detailed operational things you do every day. And the challenge with strategy is that it's not just related to decisions you're going to make or you're going to say yes to. It's more related to the decisions you're going to say no to. And that's very difficult because you're usually, as a human being, as a leader, you carry on a responsibility and you're scared, if we say no to this opportunity, are we going to lose out? And I've seen this over and over when I work with CEOs and leaders. They want to do everything. And I keep telling them, you don't have the resources, you don't have the manpower, and humans cannot handle 5-10 strategies. You need to actually think about what's the best option moving forward and say no to the other option. And that I find very difficult, or most leaders find very difficult. So they bring me so we can fight over it and then decide, okay, this is what we're going to say yes to, this is what we're going to say no to. And again, it goes back to really answering, how are you going to win? If you're not able to answer that precisely, then you need to sort of stand back and get out of the daily operations and the daily challenges and the customer complaints and think about it. It's a very great opportunity for you to sit with your team and discuss bigger picture. Strategy is a fantastic area where you can be creative, innovative, build your team around what is it that you guys want to do. It allows for that space. And I think that's why it's scary, because it's not 1+1.
Right. So now here's the thing, Moataz, and we're passing, as you mentioned, in a tough times. Like there are some
Sure.
uncertainties and all the trade wars happening. Now I'm founder friendly guy, but it was brought in the show multiple times, and yeah, like there is a kind of psychological aspect and kind of, as you said, fear of missing out aspect, and there is also this, what I call it, the ego aspect, right?
Sure.
So now, and again, guys, like I've been in your place in different positions, like not as a CEO, but I mean, because people think that this applies only to founders or like business owners, but actually we see it in our careers. So where,
Yeah.
for example, I gotta just give you a simple example, guys, and Moataz, like I need your opinion here also. So let's say, forget I'm a business owner, so I am working on a project, and my manager comes and tells me, which is he's my customer, hey, like there's this also requirement from, yeah, sure, bring it on. And then like someone else comes, hey, like the other team, they are trying to come up with kind of a competitive thing. Oh no, like we're gonna add this. And then I keep saying yes, 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 yes. And then I found out, like, oh, there is a deadline and I'm not able to right. So
Absolutely.
but from business perspective, Martez, and here it's kind of out of curiosity as well. How do you manage, the psychology of of the leaders you work with, because look, like we are all human beings, so all of us, we have our egos, we have like, and how do you, like, how you can differentiate between a founder that really you think, you say, you know what, like, but I know like it's a little bit tough, but this guy, he gonna do it, or you know what, like this lady, like really she's like looking overwhelming, but she gonna pass it, versus the people who you say, you know what, like no way they cannot do it. So like this psychological aspect, like how also it's important in your work, Mu'taz, especially when you come with the strategy, right? And then you need to tailor it based on their personality.
Absolutely. It's super critical because, with all honesty, there's a lot of, your listeners can now actually start researching this. There's a lot of writing about that consultants are, or even they talk these days about investors, that they're they actually hurt founders learning, and they don't, there's no use for having consultants and all of these things. And there's a lot of talk about this. And I always say, the idea of a consultant is to come and work with you, not just to tell you what to do. And it's a two-way learning process. That's why character of a founder, especially, or any CEO or leader, for me, makes a huge difference. That's why when I first meet with them, we need to see, and I tell them, you need to see if there's chemistry between us, if our brains click, if you find that there is something I can add, and I need to evaluate and be honest enough to tell you whether I think I can add to your character. I've had the situations before where I had to tell founders or even CEOs, um, I really don't think I can help you. We're not seeing eye to eye. So why waste your money? And this brings me to when you were talking to me about strategy, and then, founders thinking about, no, I want to do it all, and I want to do it all. And how do I convince them? First of all, my thing is about building long-term trust relationships. So I have clients that I've known for or worked with for 3 to 4 years. So by the time you establish this, they really they seek you out. And I usually, it goes back to what I tell them. It's about allocation of resource, especially human capital, brain capital. So I always sit with leaders and I tell them, you cannot process, you cannot take on all of these challenges. This is not possible for a human being. You can do more than maybe me, but at the end of the day, there are some things you need to say no to, or at least not now. And that's when we talk about scarcity of resources, that's when they start understanding, okay, you're right. I don't have all the money to do all of these things. I don't have all the staff I need. I don't have the capital, the brain capital, to be able to handle all of these things. And that's when the conversation moves to something more interesting, which is, and this is where you need finance. What is the one with the most return on investment, the most beneficial? And that's the one we're going to go with.
Right. I think there's a silver line, and there's a workshop that I was honored to be able to be part of it, where we talk about the traits of the entrepreneurs, and one of them is being resilient. One of them is being flexible, right?
Absolutely.
And people used to ask me, okay, so you're telling us you need to be resilient, like kind of show, you know, skin in the game, and not giving up, but at the same time you need sometimes this flexibility and the ability to say like, okay, things are not moving in the
Yeah.
right direction. And they asked me like, how do we know? I said it's trial and error, right? So I think the biggest thing, and for the sake of transparency, we're recording this on the 22nd of April. Probably you are watching or listening beginning of May. So just today, based on some discussions and something I saw here and there, so I said like, I think also the culture matters. It's important because I'm not saying it's only in the MENA region, but it's a global thing. But I think here in the MENA region, we have this fear of failing. We have this fear, oh, like, you know what? If this guy opened a business, like everyone gonna start to show, by finger, oh, like this is the guy who opened the business and failed. Or like
Sure.
this is the lady that she tried to start a business and failed. And, we have this fear of depression and, being blamed out, or no one gonna employ us after this.
Absolutely. Absolutely.
So I think this is culture. I said so. We need culture. Of course, we need everything else, but we need culture also as well. So if in order really to have this healthy ecosystem, we need this. And this brings me to one of the main things that um, I like to discuss with everyone, which is about being ready to go and take it to the next level and get funding. So
Absolutely.
being the guy working hand in hand with the leaders and the founders, Moataz, what really they need to do to have a proper, I would say, situation where they say, you know what, we are now fundable. You mentioned a
Cool.
little bit about bootstrapping the business. I
Mhm.
like it. But what else? What do they need to do to be able to go and stand in front of an investor?
Fantastic question, and I always get this question. I always get contacted through LinkedIn and all of this, and people are always asking me how do I get ready, or how do I eat? Actually, the question is more, how do I know I'm ready to
Mm-hmm.
seek investment? Now, from my work, because I work a lot with startups or even SMEs, and we start with the first step, which is valuation of the company or financial analysis. And I work with them all throughout the due diligence and the discussions with investors. So I've seen this over and over. And I want to enter this conversation commenting on what you said before about failure. And I'm telling you this from 20 plus experience to everyone who's listening. If there's a chance an investor has two people in front of them, one that has tried to be an entrepreneur and tried project, and I don't want to say failed, but it didn't work out once, twice, three times, whatever it is, and now they're coming with a new idea, versus somebody who has never quote unquote failed. I would say 9.5 out of 10, an investor would prefer the first one. I would prefer, if you have tried, if you have not succeeded, because theoretically speaking, and this is what I see, you probably have learned a lot more from that failure than you have if you had by chance done one startup and it actually succeeded. And the learning was, you've learned, but it's not as much as you would have learned if you had gone through other experiences. And now let's answer the question of how do you um, get yourself, or how do you know you're ready for funding? The most fundamental thing for founders to understand, the point is not funding. The point is not to raise money. The point is to build a successful company. Funding is just the tool you need to actually grow. So if you're just creating a startup just to get funding, that's not the point. Don't be over, and I know it's easier said than done, but don't be over occupied with the idea, how do we raise, how do we raise, how do we raise? The question you should be asking yourself every day, how do we make a successful business? How do we build a successful business? And when we plan correct growth and we know where we're heading, then we decide what is the point that we actually need funding, and that's when we seek it. Very critical thing for every founder, and I hope if they take anything away from this episode, excuse me, and they think about it when they're looking for investment. I see this a lot with founders. One of two, they either go in and talk to investors with this attitude that um, I'm begging for money, or they're scared
Mm.
of the investor, or the exact opposite. They come in with huge egos and they talk like they've made it and they're still at the MVP stage. It's very critical for you guys to understand. You're going to be knocking on 1,000 doors. Maybe 999 are going to say no. That's fine. And they're probably not the right investors for you anyhow. But the
Mhm.
one that says yes is basically a relationship where both ways. The investor needs to understand, and this is why I always say there's a difference between an investor and a smart investor. The smart investor understands that this is your baby, this is your project that you've worked on. I respect it. I don't need to be dismissive. If it's not a good opportunity for me, with all respect, I say no. Also, you enter not too egotistical and not too uncertain and thinking that you're begging for money. You're coming in with an opportunity. It might be useful for Mehmet as an investment. It might not be useful or suitable for me. So it doesn't matter. So a mutual respect between the founders and the investors is very critical. That's the first and most important thing, is you enter with that mindset and be okay with listening to a lot of no's. How do you know you're looking for, or how do you prepare yourself to go into investment? You need to get your numbers correct. You need to tell a very good story, but you need to show me numbers. I need to see how much you've sold. Certain sectors, I need to see what's your churn rate. In other sectors, I need to see month-on-month growth. So you need to understand in your sector, what are the critical KPIs, what are the critical measurements that you will be asked about, your cost of acquisition for a customer. I need to understand, you tell me, oh, I sold 500,000. For whom? Which one is repetitive to your clients? Which one is a one-time client? I need you to give me numbers that tell me that you're building a sustainable long-term project. So great story, great product, great team, but also great numbers that make sense. If you don't have good numbers, and I don't mean that they need to be positive, but they need to show a story and they need to be calculated, and you cannot go to an investor and tell them, oh, I really don't know. I just know that I sell this much. I don't know how much it costs. I don't know what's my cost of acquisition. I don't know what's my churn rate. All of these things you need to prepare before and be ready for, because that's what a smart investor would be asking me.
Right. So it's, if just I want to summarize a little bit and add like just to the point. Yeah, I use the wrong word because I don't have it in my dictionary. I don't call it failure. I call it learning. So
Absolutely.
thank you for reminding me. Yeah. And yes, so if you don't try, you know, if you're not failing, that means you're not trying enough, right? So
Exactly.
this is, yeah. So this learning. This is why I call it learning. I don't call it failure. Now back to the point, Matt, as you just mentioned. Now, I think also what's important is don't outsmart. If I want to, yeah, I'm kind of summarize what you said. Like, don't outsmart, people, because probably they are also smart as well. I'm not saying like you're not smart as founder. You are smart, of course you're smart, but I mean the other side, they are smart also as well. So probably just for you guys, just and Moataz, I'm gonna ask a few questions later about that. So people who invest, so usually people are, they are within your sector. So probably they have seen, not the same pitch deck, I would say, but they know what you're talking about. They know your vertical. They know the business models, and in addition to what Moataz just mentioned, so of course they're gonna see, the problem you're solving, and what kind of solution. So they want to see how the product market fit is
Absolutely.
there, and they want to see also, is it a repeatable business, right? So can you repeat? Okay, congratulations. By the way, and I know this because I read it in multiple books. So people think, oh, like I have sold this to this Fortune 1000 company. Great. Can you repeat it again? Like what's your
Absolutely.
plan to have a repeatable business? Because nowadays we're into, like guaranteed revenue kind of. So you need the money to keep flowing. So how are we gonna do it? So you need to have like kind of this playbook or framework on how you're gonna repeat this. So this is, Mu'taz, thank you for mentioning this, and of course having your financials ready. And this is why there's something called data rooms, right? So
Yeah, yeah.
so data room, people think, oh, what's the data room, guys? It's just as simple as a Dropbox folder or maybe a Google Drive,
A room for
right?
data.
Yeah. So yeah, it's a fancy, the first time I encountered it like years ago, I said, what? Like data room? What is it, a room where I open and see
Absolutely.
data? Yeah, so it's just like a virtual space where you put all your financials there. You need to be ready to show that, because, and Mataz, I don't know if you want to shed some light on the aspects of the due diligence also as well, especially from financials perspective. So any hints you want to share about the financial due diligence?
I'm glad you asked, because I wanted to tell you that, to tell your listeners, look, the process for you to understand, in a nutshell, it could be long, it could be short. But once you present to an investor and let's assume that they're interested in you. That's the first step. The second step is you actually need to sit with them and discuss a lot of stuff, go deep into the numbers. And there is two type of due diligence that has to be done. It depends on the deal and who is investing, whether it's an angel investor or a VC or a private equity. There's two things that need to be done. First one is, and they're both equally important, legal due diligence. So that means there needs to be lawyers and discuss all the potential contracts and all of these things. And there's financial due diligence. To simplify it, they need to go deep into your numbers and understand them and question every single number that's critical for them. So back to your point about outsmarting people, this is why I was laughing as you were saying is I wanted to say this to your listeners. Let's assume that you put a very fancy sheet, a PowerPoint with a fancy page of numbers. You need to realize if the investor is interested, they're going to bring somebody like me who's going to have to look at these numbers in detail. So eventually, if your numbers are not actually tying up or they don't make sense, trust me, we will find that out. It's not easy. I've sat on so many pitches where immediately, once you have enough experience in finance, immediately I look at the number, I'm like, oh, I'm sure it doesn't make sense. So just to tell your listeners, do your homework on your numbers and don't over exaggerate. Because if that person is interested, they're probably going to bring somebody who really understands finance, and they're going to go through financial due diligence. Really goes deep into your invoices, your client list, your suppliers, your costing, your salaries, how much commission are you giving to your employee. All of these things needs to be dealt with to make sure that you're building a company that's financially sound.
Yeah, and actually, this is for their benefit also, Moataz, because
Absolutely. It's both ways.
yeah, because you mentioned about the valuation, and I think one of the biggest mistakes. By the way, I can't blame again. It's not for blaming people, because I think we people, humans, we are kind of lazy, and we always aim for shortcuts, right?
Sure.
So, oh yeah, like usually companies like mine are, if I'm raising a seed round, so pre-money is $12 million, 12.5. So this is the magic number. So 12.5 or 8 million or 7 million. So I gotta put this, you know, in my pitch. So it's like pre-money 7 million or 12.5 million, safe note, 20% discount, blah, 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 blah. And then, but the investors look at it in a different perspective, because, they want to understand, okay, based on what you have built this valuation.
Absolutely.
Yeah. So there's a lot of ways. If they have revenue, I think it becomes a little bit easier, right? Correct me if I'm wrong.
Absolutely. I tell founders, especially at the first stages, please try to self-finance, bootstrap as much as you can. Going into an investor, once you've sold, you've actually gotten enough clientele, you've had some sort of consistent revenue, your sales pitch or your investment pitch would be so much easier for you to get an investor versus talking about theories and projections. You will be in a much stronger negotiating position if you have proven somewhat consistent sales. Again, it depends on your situation. Sometimes you cannot self-finance, you cannot base it on maybe donations or crowdfunding or whatever it is, or you can't get financing from some programs. If you really need to look for an investor, you need to. But my advice, try to delay that until you've sold enough, or if you've created some sort of consistency to prove that your company is worth investing in.
Like minimum have a prototype, guys. Like minimum,
Sure.
like at least, yeah, minimum prototype. I understand, in some sectors, like especially, let's say, biotech, and
Sure.
I understand. But by the way, guess what? Like such entrepreneurs, they have their own, I would say, funding routes. So usually you go to university, they have endowments there. There's like R&D budget for this. You go and work in this, right?
Absolutely. Look for grants as well. Look for grants. Many MENA countries, government agencies, semi-government agencies, some are, for example, supporting women founders. Some support, certain countries. Look for grants. Get as much free money as you can before you give away your equity.
Yeah. So, Moataz, I know you work with a lot of incubators and accelerators across the region.
I do.
So, Yeah. So the first thing, like, do we have enough? Do you think? Do we need more? Are we doing, well in that aspect? I'm not here to criticize. All due respects to every single accelerator and incubator. I think, I appreciate actually some of them. They were like kinds of early in the market to believe in the talents here. But do you think we have enough of these platforms in our region? I'm talking about MENA region in general, of course.
Sure. Look, let's look at the positive. The region, especially the GCC, has recently, or in the past 10 to 15 years, has been a fantastic, very healthy environment for entrepreneurship and startups and all of these things, and a lot of incubators and accelerators, and a lot of the other parts of the entrepreneurship ecosystem are popping up, and they're there. I think we're moving in the right direction in the MENA region. Some places were faster than others. I think if I have one sort of wish, I'm not going to say criticism, I wish there would be a lot better collaboration across the countries so that we can move up as a market, as an entire region versus separate ones. There is power in numbers, especially when we talk about markets. When outside international companies look at the MENA region, the number as a total population might look big, but it's actually, they always say this, they're like, the problem with this area is that it's so separated, separate countries, that every market has its own regulations, has its own rules, has its own subcultural things, and that makes it a tiny bit less attractive. So I wish more of that can happen on the ecosystem of entrepreneurship. And I think if there's one area where I wish there would be more attention to, but I understand why there isn't, because it's higher risk, is much earlier stage startups. They find it harder to get support, especially financially. And again, and I always tell this to founders, it's not just apply for every incubator. Apply, but also read about them and ask people who have tried them. Some programs are better than others. Some programs fit you better. Some programs, for example, concentrate on tech. Others concentrate on non-tech. So look for what's suitable for you. And I always say, do the work. It's not just get into the program, because really you get the more you get out of these kind of programs, and the more the network that you can build is based on how much effort you put in as well. So I think we are moving in the right direction.
Yeah, of course. Like, especially, I'm like you, Moataz. I like to think in a positive way always. Um, I even mentioned, a couple of episodes back. I think it was 2010 or 2011 when I used to talk to people here about, startups and, what happens in, let's say, Silicon Valley. And I tell them, guys, I think one day we're going to have this. They used to laugh at me. And then the big thing that happened was, we start to see a couple of endeavors. I used to, people that didn't know what startups are, like,
Absolutely.
So the first thing that happened, Souk.com, actually before Souk.com, it was Maktoob, which was later acquired by Yahoo.
Yeah.
And then we had, Souk.com acquired by Amazon, and then we had the Kareem. And I think these three, maybe, and excuse me, guys, if I missed some important ones, but these are the ones who always pop up in my head whenever I talk to people, especially from, other, ecosystems. And I say, yes, it's right. It took us time to get this, startup ecosystem. But these pioneers, like mainly Yahoo, so acquiring Maktoob, and Amazon acquiring Souk, and then Uber acquiring Kareem, opened eye. And there's plenty also. There's like another company, it's called InstaDeep in Egypt, which was acquired by a big company. So this one brought life. And yeah, now we have, like, listen, like, there was nothing called, for example, this incubator program. And I think these guys, they struggled a lot at that time because I think no one believed them. Funny enough, I spoke to some of the, first VCs in the region, and I asked them, guys, like, how did you manage to get actually built your fund? And they said, don't ask. We don't want to remember. It was like, it was a nightmare because even people, they don't know what a VC is. And now we are lucky because people understand what
Absolutely.
venture capital is. I just want to say, Moataz, to your point, my wish to have more angels, right?
Absolutely.
And to have more funds, of course. And I'm saying more angels because back to your point about bootstrapping. So one of the things we saw a lot in the established markets, I would say, angels played a big role also as well. Um, if you look like even the story of Google, the story of Microsoft,
Absolutely.
so they were backed by friends and family, as we call them, which is like the angel round, and then you bring them to the VC, which really gives you this huge, I call it the turbo engine, that will push you
Um,
forward. But it's good, like to see what our region have done, and I wish that we can do more.
I think, and I love the idea that the concept that you brought about angel investors, because I was reading an article how um, certain countries like UAE and KSA and Kuwait, even Jordan and Egypt, they have a lot of uh, now we call them angel investors, but they're investors who come from families with big money and all of this, but they're used to investing in traditional businesses,
Assets.
such as assets, real estate, and all of these things. And there was this article that was talking about there is this mind shift now on these initiatives that are trying to introduce these traditional investors into entrepreneurship and try to make them understand the reward and risk and how it's different than traditional investments. And hopefully that, to your point, will bring in more angel investors. And if there's anything that I really would love for your listeners to concentrate on as well, is please, when you're looking for an investor, look for strategic investors. It's not just money that you're getting. It could be a great connection. It could be a great access to a certain market. It could be something. So look for somebody who's not just giving you money, somebody who's adding value. Obviously, sometimes you take the investor because they're just giving you money. But ideally, if you find a strategic investor that's an expert in your sector, somebody who has access to a market that you're trying to get into, that would be very useful.
Right. And back to your point when you mentioned about the people who looks like they are like desperate. So do your homework, guys.
Absolutely.
And I think, as you mentioned, there's abundance of data today. It's easy to guess. Let's say if you are in e-commerce, I'm just giving up. Like, don't go to someone who invests in, I don't know, only in deep tech, because probably they will tell you, guys, like, we don't have this in our portfolio. So just do a little bit of homework. And
Absolutely.
believe me, guys, with the age of AI, it doesn't take much time from you to get this information. Like, you can, if it's a VC, you can go to their website. They would usually put their, what we call it, thesis. So you would see what they invest in, and like, don't waste both sides' times. I'm actually your time. But of course, I understand frustration sometimes push them to do so. So, but thank you for mentioning this, Moataz, because it's very important.
No, Mehmet, actually, funny enough, 10 years ago, or even 15 years ago, I also dabbled into entrepreneurship, and I had this partner. And your point was so funny because it reminded me of that day where we were trying our best to talk to investors, and we were just talking to everybody. We finally convinced one of them to go in. We actually didn't do our homework. First question they asked, they're like, "What sector are you in?" And back then, that failed attempt was in healthcare. And the guy literally looked at us and he's like, I only invest in X sector that's completely different. And we looked so red and embarrassed because we were so in a hurry to look for investors. We actually didn't do our homework, like you said. So I'm sharing my learning experience just so that founders know that we all have done it before.
Absolutely, but of course, no one can blame Mu'taz at that time, because it was hard to find this information. But today, this information is easy. Especially
Absolutely.
GCC countries here in the UAE, and in Saudi, and so we have now these communities, and everyone, you can just go and ask someone like, "Hey guys, like,
Absolutely.
do you know if these investors by any chance invest in this?" Like, and you need to just keep talking to people. By the way, don't get me wrong, I was the introvert guy and I didn't ask anyone anything. But yeah, if you are an entrepreneur, you need to remove this, self blocking belief, I would say, and you just go out. You need to talk to people. Back to Mata's first point, I like it. I think this might be one of the main part that kind of come up when we produce this, research. So, but it's very true. It's very true, Moataz. Moataz, like any final word, any final things you want to share with the audience, and how people can get in touch with you and learn more about what you have to offer for them.
Well, first of all, thank you so much for this. Very, very. I love when I talk to people who are like-minded, and you strike interesting things for me to think about. Last things I want to say. I think for founders, you have all my respect. I think the more you try, you're trying to create value, and that's very, very important. And chapeau to everyone who's trying to do this. Trying is the first step to success versus just dreaming and never doing it. All I want to say is remember a couple of things. Research. Build a community. Nobody goes through this journey. It's a very difficult journey alone. Look for mentors. Look for people who have gone through this before. Look for people who are going through it with you again in different sectors. Don't go through this journey alone. And I'm not asking you, finally, not asking you to be a financial expert, but pay attention. Like, when you wake up every day, think about top 5 things I need to be looking at. Is it the month-to-month growth? Is it my revenue? Is it how much I'm burning every day? Pick 3 to 5 things and look at them almost every day that relate to your business, so that you're at least getting used to looking at numbers and not having them be a mystery to you. Even if you bring an expert, you still need to understand them, because you need to make your decisions based on numbers. And how can they reach me? They can reach me through LinkedIn. I have also my website, moatazmukhaimeradvisory.com. Yeah, and I'm reachable through LinkedIn. Anytime anybody needs anything, please do contact me.
Sure, please do, guys, contact Moataz. And we are, again, as Moataz mentioned, maybe I'm repeating myself a lot today. We are living in a lucky times, because you don't need to go and learn everything, because in reality, no one can, even me included.
Me too.
Yeah. So this is why, especially in startups, and guys, maybe you have seen it. This is why you have your team, and then you have your advisory team, right? And this is where, the expertise of someone like Moataz can come. You don't need to go and waste your time. So you focus on what matters, but at the same time, you have this, guiding mind, which tells you what to do from strategy and for your financials and for your investor readiness. So, Moataz, thank you very much for being here with me today. I will make sure. So, guys, don't look right and left. So, the link for Moataz's LinkedIn profile and his website, it will be in the show notes. If you're listening on your favorite podcasting app, if you're watching this, you will be finding it in the YouTube description. And as I say always, this is for the audience. Guys, thank you very much for listening or watching us today. If you are here for the first time, thank you for passing by. I hope you enjoyed it. If you did so, as I say always, give us a thumb up, share it with your friends and colleagues. We're trying to build this learning community for business owners, startup founders, people in technology also as well, who are curious about, this landscape. And if you are one of the people who keeps coming again and again, thank you very, very much. Guys, like, this year, you put the show on steroids, because I'm not able now to count which countries we are ranking in. So we are doing well this year. And for the first time since I started this 2 years ago, we are now, I just checked, and again, 22nd of April. So we were actually ranking in the top 200 in 4 countries at the same time. So never have seen this before. So this cannot be happen without first my guest, Moataz, you included, of course, of course, the support of the audience. So thank you very much. It's an honor for me to be able, at least in a small scale, give back to the community. And as I say, always stay tuned for a new episode very soon. Thank you. Bye-bye.
Hit that subscribe button, share the show with your tech-savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.